We're joined by Kaustubh Pawaskar, who is the research and fundamental research analyst at Sharekhan by BNP Paribas. And Kaustubh, thank you so much for joining in with us this afternoon. And I'm just going to start with what we're seeing coming in. When you look at in the FMCG pack as of now, Marico, look at the numbers that have come in, marginally lower in terms of an year-on-year basis in terms of consolidated revenue. GCPL also a bit in terms of a weakish in terms of volumes that we were expecting as well. So, how is this in terms of understanding we should get for the FMCG pack as a whole as of now for Q2?
Q2 again is going to be weak quarter for the consumer good companies. So there is not much bit of improvement in the demand as such for the consumer good companies. Rural is yet to see a fundamental recovery. Whatever growth what we have seen in the quarter one, it was on the back of the low base, but from the consumption point of view as such, there is not much improvement in the rural India, and also to the fact that food inflation was high. August monsoon was below par. So the recovery which was supposed to happen in quarter two, it was not there. And because of that, we have seen lower growth for consumer good companies in the domestic market, and that led to volume growth in the range of low single digit to mid single digit for the companies who have come out with an update. And I believe that that is going to be the a flavor of a quarter two for most of the consumer good companies. However, on the other hand, higher margins would definitely help these companies to post decent bottom line growth in quarter two.
Right. Also, Harsh joining in. Let me quickly ask you with regard to when do you see therefore recovery in terms of volumes, because volumes has been a challenge through FY23 and it spilled over into FY24 as well. Do you expect any sort of a recovery on ground starting off in Q3? How should one look at it?
Yeah, so good thing for consumer good companies is the raw material prices. They are yet to see any significant inflation. So volatility is there in the crude prices, but currently most of the companies are at a comfortable position and they have taken the required pricing actions in the portfolio. So we should expect this pricing action to have a material impact on the volumes from quarter three. So food inflation is now under control. Monsoons were good in the month of September, so it should have a impact on the sowing. Prior to the election years, we see government increasing spends on the in the rural markets or agri economy, so that should augur well for rural demand to see a good bit of recovery in the quarters ahead. So once rural is back on track, urban consumption, I think the demand is quite stable over there. So once rural is back on track, we should see volume growth gradually recovery, and that is expected from the quarter two with some bit of help from the festive demand, which is going to be there in the month of October and November.
Right. Kaustubh, while you were saying, rural is something that is still under pressure, but urban is still stable, right? And is that a main reason that today when we looked at an upgrade of Kalyan Jewellers, that came in quite strong in terms of the growth? And again, a strong quarter coming in for them. Is that something we could expect it from these jewelry retailers? Is that something that we could see a trend coming in from Titan as well then?
See, difficult to say because last year festive season fall during the quarter two. So we have seen Dussehra, Diwali coming in Q2. This year festive season is falling in quarter three. So that base of festive demand would be there in Q2 last year. So considering that, if we exclude that base, we need to check how the demand per se is there in the jewelry space, but difficult to say that similar kind of numbers would be seen for Titan as well, considering the base of festive which moved from Q2 to Q3 this time.
Right. And, what would you say about the QSR space? Of course, that also for a predominant part of the last year has been under pressure. But, with the World Cup and, hopefully things should start moving for QSR. How do you see it going directionally, and where will the recovery come first? Will it be QSR? Of course, you all spoke about jewelry, Vinny and yourself, and we also speak about core FMCG. What are the signs that one should look for in terms of this recovery?
So QSR, again, the inflationary pressure had impacted the overall QSR space. Most of the QSR players saw, weak same-store sales. However, if we get into categories under the QSR space, pizza is the category which is lagging behind, the burger and the sandwiches, which are largely considered as a value category. So I believe that from Q2, again, there would be the impact of, Adhik Shravan and, that during those days, the consumption of chicken doesn't happen. So that will have an impact on QSR sales. But we should see a good bit of improvement from Q3 of FY 2024, where categories like burgers, sandwiches will do well, and in those categories, Devyani International, restaurant brand Asia, that is Burger King, will definitely do well. I believe Domino's will take some time, Jubilant Foodwork, because they have taken their promotional activities in the market prior to the World Cup. We need to check whether those activities will help traction to improve during the World Cup time. But that is what is the trend which can be seen in the during the cricket season. So that is something which will be keenly monitored. But Devyani International restaurant brand should see a good recovery from Q3.
Okay, Kaustubh, thank you so much for joining in with us this afternoon, giving us an understanding on the QSR space, FMCG space and retail space as well, the whole consumption pack, and it was good to get an understanding before we start with the earnings season. Thank you so much for joining in with us, Kaustubh, this afternoon.